company, Suprajit Engineering, is on the radar. The company signed a MOU with a Japanese cable maker to design, manufacture and supply transmission cables in India. Let's talk about this and more business developments. K Ajith Kumar Rai is founder and chairman at the company. He's with us now to take some questions. Mr. Kumar, good morning. Good to have you with us here. Prashant this side. Could you give us a sense of the joint venture? How much investment are you putting into this one? And what is the size of the market that you hope to capture with this?
Good morning, and thank you for having me on your channel. We just have announced an MOU with the Chuo Spring company in Japan. Chuo is a market leader in specialized springs, actually. They're into suspension springs, engine valve springs, etc., and supplies to most of the Japanese OEMs. And they also have a cable division, and they also supply to the Japanese OEMs in that space. We are particularly interested in, through this joint venture, to manufacture transmission cables in India for the leading Japanese OEMs. As you know, Suprajit has limited exposure to the Japanese, the two major Japanese OEMs directly in India, although we supply to them and as a tier 1, tier 2 supplier. But as an OEM, I think the transmission cable is one of the key products which we do not supply. And Chuo is a supplier of these products to these two companies in Japan and elsewhere in the world. And that's the right way to enter the OEMs. I think that's why this deal has been struck. The collaboration finalization is going on. I think the investment details will come up probably a little later. We're in the process of establishing a JV company in India at this moment. And we believe that in the next few months, we will be finalizing all those things. So
this is going to be sold, these transmission cables will be sold for cars, Honda, Toyota cars in India or around the world from here?
The starting point is the Indian two major OEMs, Maruti and Toyota. And of course, eventually as the joint venture evolves, we will look at other transmission cables for other customers as well.
Okay, all right. Hi, Mr. Rai. Good morning. Nigel on this side, and good to see you in. So just to understand, you're not making these sort of cables in-house as of now, right?
We do make, but we don't really supply to any Japanese manufacturers as such. But it's mostly what we make is into the non-automotive and heavy trucks industry. The passenger vehicles, we have had very limited exposure.
Okay, so it's giving you a bigger exposure to the select clients that you have mentioned. So, you're getting access to this clientele. Got it. Could you give us some more details about this arrangement? What is the revenue sharing between both the two entities, the Japanese entity and y'all? Will there be some royalty payment? And if we could just outline a broad capex that y'all have in mind, what is the normal asset turn that you could look on at this?
Again, some of these details are yet to be finalized. I think what we are trying to do is to bring their very specialized transmission technology to India and make India as a manufacturing base for the transmission technology for both the partners. I think the idea is to, of course, approach the two major customers, as I said, but eventually is to approach the whole global market and see how this joint venture can support the specialized transmission cables to other customers as well. In terms of the details of this, I think we will be, starting obviously for the domestic requirement, and we'll scale the market as required. The details of the financial part of it is, although is internally been worked out, we will probably inform more probably at a later stage. At this moment, it is still under finalization.
There will be some royalty payment, right?
Yes, there will be some royalty payment.
And a rough quantum?
That is a standard for any joint ventures anyway.
Yeah, a rough quantum, what could it be, the rough range?
Again, these are all, we're under NDA to disclose all these matters. But, it's probably basically we'll be doing what the industry standard is in royalty payments. It will not be any different.
All right, let's talk about other businesses. Then once you get further details on this, we'll re-invite you on the channel and we'll get an idea about capex, royalty payments, asset turn as well. Now, you have a fair bit of exposure to the export market, and we're getting mixed commentary from a lot of auto majors. What is your sense? Are things on the mend? Are those supply issues, getting sorted out? And do you expect recovery from here on, Q3 and Q4?
Yes, I think the global market is certainly tepid. Both Europe and US, even China markets are pretty weak, I must say. The global geopolitical uncertainties are not helping at all. Having said that, I think, despite, some of these big automotive guys have even talked about plant closures, etc., it doesn't seem to be affecting us too much. I think our controls division, which operates outside of India, is still having a good traction of business. And we seem to be growing the business despite the market is not growing. So for us, it doesn't seem to have a big effect. But yes, the market is in a turmoil at this moment.
Mr. Rai, what's the export share, sir, of the business?
I think 52% of our business is outside of India. I'll say 50-50 between India and outside of India.
And how much is it in the US? I mean, how much do you, 52% would you sell in the US?
Of the 52%, I would say, 50% will be in the US.
Okay. These tariff threats, etc., will that hurt? Or you think the sectors that you're operating in, not really, will it? Any thoughts at all?
We have to still wait and watch exactly what tariffs will be done. But please understand, it will be affecting uniformly all component suppliers. And I suppose when there is a tariff issue, which is sort of enforced, by the local governments, we'll end up going to the customer only, right? So that, for us, it's eventually going to be passed through. Although, in the initial stages, there will be some kind of a hard bargain to be struck with the customers.
All right, let's talk about a couple of your segments then, sir, before we wind up. SED segment margins, it saw a sharp contraction in the past quarter. On SED, what is the sustainable margin, if you could help us out? And the acquired SES segment, out there, you had a huge negative EBITDA margin. I think it was around 15%. But you were saying that sometime in FY26, maybe towards the end, it will turn around. Do you stick to that, SED as well as SES? Give us some color.
Actually, I don't know where you got the controls division number, but actually our controls division margins have improved. Last year, for the first half, we are at about, I think, 4 or 5%. It has increased to 8%. Just to give an overall color, globally, auto component industries operate in an EBITDA margin between 6 to 10%. We started below 6%.
Sir,
and we are now at
SES, sir. I'm talking about SES.
Oh, you're talking about the...
Yeah, SES, sir. Oh, that is still a negative margin, the one that you acquired.
Yes.
And you were looking at turning it around. So SED, I'm talking about some kind of margin pressure. And SES, which is the one that you acquired, which are gradually going to turn around. So give us some color on both.
Yeah, I am giving the color on the SCD, controls division. There I said, the margin is at 8% today, which is much better than what it was last year, under 6%. So there has been a significant improvement in the SES, the SCD, the controls division performance. As far as the SCS is concerned, I think we have made it very clear in our business update as well, that it is a company that we have acquired from insolvency. So obviously it has gone into insolvency because of the losses. And obviously when you are turning around, it takes some time. We are giving, I think, 2 to 3 quarters for it to sort of stabilize and then start turning positive. So for the next couple of quarters, there would be some challenges as we streamline the operations, make sure that all the necessary, customers are approached for price amendments, and make sure that the supply chain is stabilized, make sure the operational efficiencies are improved. Having a good exposure globally into cables business, we feel that this is not a challenge for us over a couple of quarters. And once that is done, I think we expect the business to turn around and become EBITDA positive. So, but the point here is that the strategic importance of these assets. Today, we are able to offer through these assets, customers onshoring capabilities, nearshoring capabilities, and low-cost options from India and China. I think we are one of the only cable suppliers in the whole world who are able to offer these three, fully, what I would say, complete array of capabilities, despite whatever the geopolitical scene is. So we'll be the most flexible supplier for our customers. I think that is the greatest advantage of these acquisitions.
Mr. Rai, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC-TV18. Thank you indeed. Well, 20 points are higher. So, actually with 20 points, we're at the day's high. That tells you the kind of 40-45 minutes of trade that we've had so far. 24,000, just under 24,300 on the Nifty. There you go. That sharp spike that you're seeing. Otherwise, we were flat to slightly. sideways. We take a quick commercial break here. We're going to come back and we'll have a discussion lined up on the auto space. You've got Ola Electric, you've got Mahindra & Mahindra's EV launches, lots to talk about. And we've got two gentlemen joining in to help us do that in just a bit.